So at the start of the year, I was looking at the property market and my personal portfolio, and I'm like, if I accumulate 3 to 4 properties this year, I'm going to have the greatest year ever and set myself up for decades to come. And so it was all prefaced around how do I get as much borrowing power as I possibly can and as much cash as I can to go and acquire as many properties as I possibly can within a year. So think 1 a quarter. And that was the key focus, was ensuring that my portfolio goes and accumulates. That was it.
Okay. And we did a previous episode, but you definitely acquired one.
Yep.
But then have not acquired anything since.
Deliberately.
Okay. Now, why?
So it got to a point where we were looking at going for the second one. And I'm like, okay, let's go again. And I sat down. So we live in Melbourne, CBD. And I sat down and I started looking at going, great, in the next 12 months, 24 months, I'm going to start a family. I'm also going to need to house this family somewhere. What is going to be the best place for us to not deal with all of these ups and downs of rents and deal with fighting for 50 people to try and get into a particular property? And so I said, maybe it is the best opportunity for me to go PPR. And then I went back to my investment brain and I'm like, no, that can't be possible at all. And so I actually had quite a few conversations with yourself, with Aaron, who we even had on the podcast talking about debt recycling, the exact thing that I needed to know more
of. The power of it.
And how I could utilize an asset that has a component of investment grade into it that also meets the PPR expectations.
All right, so we just want to pause there because I think there's some interesting insights. So number one, your earnings hasn't gone down, and it's not because you're not stopping accumulating because you can't.
No, like I could accumulate again.
All right. Second one is that your strategy for property and what you've looked at still works.
Completely.
So if you kept accumulating within your own strategy, it's not like that market has tanked and you're like, oh, wow, I got to jump ship. This doesn't work.
Completely.
It's your personal situation and what you've looked at that is changed immensely here. I'm going to throw in one thing you didn't mention, which I know we've discussed here, which I think is important. Also, the idea of acquiring property in Melbourne because you want to be in Melbourne.
Yeah.
So if you're we're going to say not financial advice, if you believe that Melbourne is going to do well in the coming years as well, which you and I both do, is that if you continue to invest and never acquire an asset in Melbourne Southeast for a PPR, there's just a hurdle of coming back to that PPR that you're always going to have to jump.
And that was one of the layers that I was looking at, was going, okay, if I continue focusing on a more accumulation of properties, at some point I'm going to have to pivot back to, or I most probably will. I don't have to do anything, but I'm most probably going to switch and pivot and go buy my own house. And I go, okay, well, how do I best do that from a financial perspective? I probably have to refinance some properties, extract out some equity, do all of these things versus, okay, well, what happens if I delay accumulating a couple more investment properties and do the thing now? And the way that I also look at it is I don't have any properties in Victoria, which Melbourne's obviously in Victoria. I believe that the southeastern suburbs / eastern suburbs of Melbourne will always do well. Like it's going to go through extreme density creation over the next couple of years or decades. And I go, if I continue to push this out further, the property prices will continue to increase, which I'm completely fine with. But maybe whilst I have the dry powder / capital available, maybe that's going to be the really good way for me to get a property in Victoria, a really good way for me to sort of focus on spending my money on mortgage, not rent, as well as going to do the whole family thing. And so it's more like that double split of me going, great, like this is almost part of the portfolio. And then I can obviously utilize it to debt recycle and do all of these other great mechanisms for PPR. So it's not a huge change into just going to only buying more investment properties and renting.
How much of your decision has been weighted on what it's changed to be a renter? Because there's two factors to this, and I want to lay them down and I want to hear both. One, rents have gone up. Rents have gone up substantially, right?
Totally.
If rents halved, I think this would be a different conversation.
Totally.
And the other side of it is security,
Yep.
right? A place for having children, school zones, all the stuff we've been dealing with and thinking about, which I know you've witnessed in my life. And then so I'll even go another one, supply, how hard it is to get a good rental in the locations we want to live. Like it's all good to be a rentvestor, but it's like, what if there's no rentals where you want to live?
that comes back to the key. I'll put one more thing into it, which is time and necessity. So I have no need to have a PPR now. Like I can wait 6 months and buy something, where there's a lot of people trying to buy their own house now that already have the kids, and so they must have something that looks like this, where I'm very beneficial. I don't have kids yet. There's no need for me to go and buy a place, which also then removes all pressure from me just trying to get anything. So I just get to look at real estate every single day.
I will say in some of the suburbs we look, which I'm in Brighton at the moment, and I've been going to a few open inspections and speaking to agents and things like that. I'll tell you right now, when a parent wants to put their kid in a school zone, they do not care about price.
Price is irrelevant.
They're not valuing the house on it being a good investment or a reasonable. No. I must maintain my status in social circles.
Completely.
And my kids need to be here. And I spoke to an agent the other day, and like he was referencing the ruthlessness of some of those things. It's basically how he makes all his money.
We're just two parents playing off each other to try and get their kids to go to the best school.
Yes.
There is so much more to that. That's fantastic.
Disturbing. Anyway, continue.
Yeah, and so for me, where I'm at, there is no pressure, right? Like we could fast forward 3 months and me go, PPR is not a good idea. Let's just go and buy 3 properties, 3 investment properties. That is the key to this whole play of me just going, you know what? If it needs renovations, cool. Time's on my side.
I don't necessarily think you've represented that well. You've said in that statement, you're almost like, I could flip and go buy investments. I don't think that's what we've been discussing.
No, so there's 2 layers to it, right? Of me going, I want to focus on getting a PPR.
So that's the new goal of the year?
That is the new goal of the year.
Okay. So wait, were we going to get in? Are you now the PPR accumulator?
I was trying to find out like names to put on. It's like, what is it? Like the Indian giver, like the renegger.
I will say
like on his call.
It's not a bad year if you get one investment property and a PPR. That's actually a great year.
Totally. And that's where it's at. Like it is going. We've bought one investment property this year, going to go hard on a PPR, which is awesome. Like I could not think of anything better at the current stage of life. Funnily enough, we might even do a bit of a reno on a house or do some kind of value add. To see how it sits in the portfolio.
I actually think that's a great opportunity in the market, and I'll express why. I think it's important. People right now are paying a premium for finished products because they're concerned about builders, trades, supplies of tiles, timber. So I actually think, in my view, at the current time of recording this, what are we in? We're roughly at the end of May into June as we record this. Places that need work have a little bit of, I think, are a better investment.
Completely. And I think that the price is also a little bit better comparative to completely finished places. Because if you've got a family, you're not going to wait for a 3-month reno or a 6-month reno.
You can't. You
have to go in. But then what family wants their kids to be susceptible to a kitchen being ripped out and all the dust in the house and things like that? And so...
Wait, I might send my mum this episode. I think that was my entire upbringing. I don't think we ever lived in a finished house.
That explains quite a lot, Charlie. But yes.
That's the way my brain development's just got like sand dust in my...
Sawdust.
Absolutely. Insulation.
And so that's been the hard pivot, which I actually never expected coming into the year. I think, seeing the prices adjust quite nicely in the southeastern suburbs has been quite good. So that also...
they be going up.
That also adds another layer to it. So, time, opportunity, completely reneging on me becoming an accumulator to go and pivot into getting a PPR. All right, fellow property investor. If you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.